we say 50 million?
50 million ounces a year. So they would have to be buying 5-year supplies. So we're looking at almost a mandatory purchase of 250 million ounces.
And that's about 25-30% of all silver mining in the last every year.
Yeah.
Silver mining production, about 850 million.
That's right.
I thought it was over though. They said the run was over. How many people said it was over?
A lot of people said it.
I mean, it could be a dead cat bounce. Who knows?
Yeah, I mean, and silver's back to almost 51.
Right.
And I had a lot of things that I had going on this week. Was the important question. I don't know if you had it, but was it time to sell? Did you get that?
No. I mean, a lot of people freak out. They never freak out when it goes up for 9 straight weeks in a row. But when you talk about silver, it went up 40% in a couple of months. That's a market that is ripe that's overbought. That's a market ripe for a pullback. It's always frightening when you've seen such pullbacks in this industry that are not correlated to
virtually anything.
Right.
Well, this is what I would say. I'd say, number one, you're right. When we look back to where we were at the top to where we are now, gold has seen now net retracement of about 6%, and silver's seeing a retracement of about 5.5%.
Which was nothing.
Now, when I look at that,
silver's still up 70% for the year.
I know, but when we look at it relative to some other things, like when we look in the markets, and I see companies like DoorDash that went from 280 on Thursday to then it went to 195. If we look at Palantir from 220 down to 175, those are a little bit more violent moves than what we've seen in a 5.5% down move.
I don't remember what the actual PE ratio is of Palantir, but it's somewhere around 400 to 1.
It's more than that. I think it's more than the 600 plus. But when we were posed the questions during the peak of when gold went up to 4,400 and silver was at almost 54, and then when it went down, and then we saw a little bounce up, the only question that I got from certain people was, is it time to sell? And my answer was kind of simple and the same, that the only real reason that you would sell is if you've identified another asset that you will believe will outperform silver and gold.
That's a pretty good answer. You certainly don't want to go back into dollars right now unless you need to.
And with that, what changed if you own silver and gold, beside the price? What changed fundamentally to make you think differently about that asset class?
It's conditioning, brother. It's conditioning. People in this industry have been conditioned to counterintuitive price behavior, violent smackdowns, and a market that never seems to break free from its shackles. But the strength that we see right now is extraordinary. I mean, I've never seen anything like it. And then you throw into it the U.S. government finally classifying. We've talked about it for a few months now.
Definitively
classifying it. It was a proposal. Now it's been classified a strategic or critical mineral. China is doing something similar, including limiting their exports now. So you have the largest refiner, the second largest producer in the world that is limiting exports and really been accumulating an awful lot. We talked about them buying doré and concentrate and flying all around the world. At the same time, their supplies in Shanghai are literally being decimated, along with the LBMA. Supplies are tight. The fundamentals are strong, and now you have governments, not just central banks, which was big enough with Russia and China, sovereign wealth funds, India. Now you have the U.S. government classifying it critical. They just put a floor underneath it. They're going to buy it.
So I don't know. Are we doing product placements, by the way? Because I know I have Diet Coke, you have regular Coke, but we're not getting paid for it. So are we supposed to
call?
Are we supposed
to
be
look into
covering this? Like how they cover the Apple on
you
the
should.
computer?
I think you should call and see if you can get a deal for it.
I will. Well, that's the next thing. So I sent you a link. Was it this morning or yesterday that I sent to Keeping Ball Guy Money?
Yeah, I saw it. Roger, good guy.
So very good and very informative. And, contrary to what most people think, we watch a lot of things. We watch a lot of different people, and there are a lot of intelligence out there, not just with the one and only Andy Schectman. There's a lot of smart people out there. And I try and watch and read as much as I can. And, with what you were talking about being finally classified silver, he was talking about the government having to stockpile because we ran through it in 20. We ran through our silver stockpile in 2020. And again, where he gave you credit on the military needing silver, he was basically saying that roughly we will need to stockpile. I think that might fall if you just bring it up a little bit, it might fall off the back.
Yes.
Pull it, yeah, there you go.
We'd say 50 million.
50 million ounces a year. So they would have to be buying 5-year supply. So we're looking at almost a mandatory purchase of 250 million ounces.
And that's about 25-30% of all silver mining in the last every year.
Yeah.
Silver mining production,
Yeah.
about 850 million.
That's right.
And I think that's a conservative number. I think it's a low number, but it was nice to get the shout out for sure. But I think that's the point here. What you have is a slow motion run to accumulate commodities, and it's starting to gain momentum. It's starting to become more out into the open. And it's weird that the government is actually embracing the things that actually help de-dollarize. In other words, these are the things we've talked about forever, but now they are more or less validating, in my mind, by their actions, gold and silver. And the fact that it's a critical mineral, and the fact that China is doing the same thing, plus limiting exports. And part of the critical mineral designation is President Trump's ability to limit exports out of the United States as well. When you realize almost all the silver we get comes from Peru or Mexico or Canada, this is a race. And at some point, everyone's going to say, screw it. I'm not sending my stuff to North America. It's every man and woman for themselves.
And I'm glad you brought that up, because one of the other things that, it's not just always on the positives here for metals, because again, there's going to be a time to buy and there's a time to potentially sell. But one of the things that Ball Guy Money said was on both sides of the equation, the benefits and the pitfalls. Yeah, I mean, I guess you could say that it now makes it easier for people to start new businesses in terms of mining, right?
The mining industry for the last 20 years has been cash starved and forgotten. And that's why there has been virtually nothing in the way of new mining shares. In fact, I was listening to Keith Neumeyer, and he was talking about many of the silver companies are actually turning into gold companies, that they're buying gold mines because it's so hard. They are the purest silver mining company out there. Roughly 50% of what they accumulate is silver. It's becoming hard to be a primary silver miner because silver is depleting in nature. And it's, this is why I think it's critical. The same organization, the Geologic Survey branch of the U.S. government that classified it critical, is the same one that came out a couple of years ago and said, it could possibly be the first element actually struck from the periodic table. As crazy as that sounds, they said this because it is depleting. It was 16-to-1 ratio of gold to silver for 5,000 years. Geologically, now it's 7-to-1 because it's found near the surface. And to Keith's point, there are very few companies out there mining just silver.
That potentially could be the worst thing ever. And I don't even know if you realize why.
Why?
Because you have a tattoo on your arm that has silver as one of the elements.
Well,
and if they strike it,
yes,
no.
Cross it.
We will strike it.
Mm-hmm.
We will figure out a way, and we will strike it. You have to keep up with the times.
That's a good point. That's
going to be dangerous. But basically, what he was saying was, going back, the United States only has about 4% of all of the silver that's mined every year. So for companies right now to go out and start new mines here in the United States would almost be, I think, as you said, it would almost be fruitless to do so now when there's already plenty of them out there and it's become much more difficult to do.
You'll see consolidations instead. The majors will start to buy the juniors. But
it's not going to be something where you're going to really see new companies.
No, and even if you did, the time it takes to build a mine, the infrastructure, you're talking years and years and years.
UBS. Did you talk about UBS already?
No.
UBS pounds the table. They say buy the dip on gold. That was the recommendation from their analyst. I'm probably not going to pronounce his name correctly. It's like trying to, if somebody would see Naveed Baradarian's name for the first time. His name, hold on, would be Sagar Khandawal. He's the analyst at UBS, says he sees upside of 4,700 in Q1 of 26. And that next year, due to the falling real interest rates, a weak dollar, rising government debt, and all the
let me be honest. All these so-called experts have been revising their numbers upward and upward and upward. At some point, we just have to agree that they don't know shit, and they continue to revise their numbers upward to maintain relevancy. Now you got Bank of America saying $67 silver. Where were they last year?
Yeah.
Where were they? It's the same thing. But they've been revising it from 2,000 to 2,500 to 3,000. How about just stop projecting? And, I get your point, but I think these bankers that are part of the cartel, they're telling people just enough, but not enough to. I don't think they know what they're talking about enough to make these kind of projections. I just don't.
No, I very often don't say analysts, I say analysts.
Yeah.
Because
to me, the bigger thing is Michael Hartnett saying 25% allocation, or the CIO of Morgan Stanley 20%, or Jeffries. They say 6,600. They are, at least to me, by next year, more. I think they have a better understanding. They were primary distributors for all the world's mints. They were in the gold market heavily, but even still, I guess I'm being biased. But when you see Jeffrey Gundlach say 25% allocation to gold is underweight or not overweight, these are different type of people speaking to a different strata of people. And to me, that has far greater weight than some guy at UBS saying 4,700, because he was probably saying 3,700 a year ago.
Yeah. Okay. I used to say to you, hey, Andy, was there anything other than silver now at $50 or anything that is the same price today as it was in 1980? So on the count of three, I hope I get this right. We'll both say it?
Yeah.
Okay. 1, 2, 3.
Sugar.
Coca. Well, I was going to think Coca. Yeah. I thought it was cocoa.
No, it's sugar. And I haven't looked. So that happened.
Clearly, I'm not doing very well.
I did. Yeah. You failed. I was on a podcast with Chris Marcus and said, I'll give someone a silver eagle if they can tell me any commodity or any asset that was trading at the same price as
40 years ago.
Yeah, and the guy, I actually had to give him a silver eagle. He said sugar, and he was right. I don't know where it's at now, but
right.
By and large, anything that you talk about, there are very few things that you could think of that.
Or at the same price 45
but
years
even
ago.
remotely close to the same price.
Yeah. And again, when we look, and then if we were to adjust for inflation, which we don't at this point, it is substantially lower than it was back 45 years ago. I mean, if you
look at gold. Gold's 5 times what it was in 1980.
Yep.
The previous peak. Silver has been held back. And the question I've always said, posed to people, that what Roger Bald Guy Money talked about, was why? It wasn't so the bullion banks can make easy profit. It was, in my opinion, something much deeper than that. And that's why I went down the rabbit hole of the military-industrial complex and the need for high-tech silver, or silver to make high-tech weapons. And it's not even about the cost. It said that the cost would attract speculators and would attract sovereign governments, and everyone would rush. The spotlight would be shown on it. It's not about it costing more money to build a bomb or a F-35. It's that it's competition for a very small amount of silver that is depleting. And now there is realization around the world that these countries are now coordinated, sophisticated. They understand what's happening, and quietly everyone is trying to scoop up as much as they can, take it from the exchanges, stand for delivery. Quietly, but it will turn into a sprint. It will turn into a sprint at some point. And then you look at it this way: you have 3 factions that will ultimately battle against each other. You have the industrials, Tesla, Samsung, and Sony. You have the solar panel companies. You have the hedge funds that say, "Oh, look at this! It's a tiny little market cap. Money flows into it. It's going to explode. It won't just go higher. It is such a tiny market cap that it will explode." And now you have the governments putting a floor underneath it and buying themselves, to your point, minimum of 50 million ounces a year, if not more. And China limiting exports, and the LBMA running out of stock. I mean, the whole thing is crazy. I mean, the potential is massive. And I got David Jensen coming on my show next Wednesday, who is the LBMA expert. I think people should go check that out.
I love